Hopefully it ends with what's been happening and what's been an extremely excruciating year thus far, and that's just about mildly putting it. But let's talk about what happened while we were away for the Mahashivratri holiday. Lots was happening with the US equity markets, and we will talk about the stability that we had on Tuesday. But US futures, they've been steady. Nvidia earnings report came out, and it's strong. Despite the kind of flat line that you had in terms of the stock movement, that is. And the S&P as well as the Nasdaq closed in with modest gains as well for themselves. Trump, of course, has announced that 25% levy on European autos now. That's the big news. And of course, that Mexico, Canada, and that the tariff implementation there is going to take place on April 2nd. You've got the US Treasury yields, which have fallen for a sixth consecutive day now. Crude prices are at a 2-month low. The dollar index is up after, Trump's potential tax cut plans. And crypto assets, they're also plunging to multi-month lows. So it's not just equity, but along the line, all risky assets, or all rather risk assets, that risk on momentum or that feeling definitely is fading away, not just for equities, but for the cryptocurrency market as well. So that's pretty much it. But yeah, it seems that the US market is in for a pause.
So Aisha, the crowded trades in the world are showing signs of topping out. One of the most crowded trade in the world was US tech. The BAP stocks, as we call them, buy at any price. Those stocks have already reversed. Tesla, the go-to stock in terms of momentum and indicator, that is down. Second, Bitcoin. I mean, post-US President Donald Trump, the minute markets know that he was coming, and he in a sense is a big votary of Bitcoin. But Bitcoin almost went to $1,100,000, and then from there it also has started retreating. Crude, because geopolitical tensions are down, that seems to be mellowing down a bit. So globally, you do have an air of profit booking. You don't have any kind of a sharp reversal, but you do have a retreat in terms of some of the key indicators, which in a sense have been stretched because of the change of the regime in US. That's one. Second, you got to ask yourself, what does that mean for you? If US markets, which have started stalling, Bitcoin has started retreating, dollar index has stopped rising, what does that mean for you? So are you likely to outperform in this fall, or are you likely to go against the US market? So you've gone against the US market, Aisha, because you've not participated. Frankly, US markets are not far away from its all-time high. The correction is not a meaningful one. So what happens to us? I think we are not likely to, we may outperform the fall, but we will fall, and we will fall less. But to assume that US markets are down and we will go up against the tide, that may not happen.
Yeah.
Up until now, we've gone against the tide. US markets were up and we were falling. So you will be with the tide, but the speed of selling will not be that intense. That's the good news. The bad news is that, look, there is no life in the market. Commitment levels are low. Nobody wants to buy FNO. Nifty, you can still say, is below. There is no sign of reversal. You can look at the FNO data and say there are more shorts than more longs. So while you can make a case that US market stalling could somehow lead an outperformance, but there is no inertia, momentum, sign of reversal, participation, or news which will drive us higher.
But yeah, given that we've already had such a steep, nasty fall, maybe we're going to fall less should the US markets actually turn tide. But yeah, US President Donald Trump is now reiterating his insistence towards that 25% tariff on imports from Canada as well as Mexico, and he's now adding the European Union to the mix of countries as well. Remember, the European Union has a 10% tariff already on passenger cars, 4 times the rate of the US passenger car tariff, which is currently at 2.5%. US officials have also complained about European value-added taxes of at least 17.5%. So he seems to be tackling that. But let's talk about our markets. A day's break, but we saw a bit of a rebound actually come in after a 5-day slide, at least for the Sensex. The Nifty though we were sub that 22,550 mark, some sort of stability is what we had at our hands, at least on Tuesday. It was largely flat for the better part of Tuesday's session, though towards the end we did come off a little bit from the top of the day. Couldn't quite sustain there. But I think today is going to really be the litmus test, so to speak. Today you've got the monthly expiry, and I think today that, line in sand is going to be marked in terms of where the resistance, next support levels for the index are going to come in, as well as for the Nifty Bank as well.
So that number or the haloed number of 22,800, that's been broken.
Clearly, yeah.
So you are in a downtrend, and that downtrend is unlikely to reverse in this kind of a global environment. What we need to judge is that are we likely to fall further before we make a base, or the selling, in a sense, the technical adjustment is over while you will remain low. The bulls would be on a back foot. They are not going to be going back to the pavilion. There's a difference in staying on the pitch and the difference in getting out. So I think the bulls are not out, but they definitely are on a back foot. But where do we go from here? Technically, I think we've already said that, look, the reversal has not happened. You need a bout of short covering or a reason why bulls, bears should panic. That's not going to happen. But what may actually happen is that gradually the medium-term investor and long-term investor would say that, oh my God, how come nobody's talking about the good thing that's happening in the economy, which is the commitment from RBI, what government is doing in terms of pushing the capex cycle up, where valuations are, how the base effect for earnings is kicking in, high frequency data point. I think if you expand the time horizon, then the narrative really changes. So if you are a hand-on-heart trader, well, I don't think it's time to buy, and especially small cap stocks. If you increase your time horizon beyond 3 months or 6 months, then there is opportunity in the market where pockets are looking better. And if you have a long-term horizon, guys, equity will always create wealth. I'm simply saying the obvious. So the summary is, short-term, well, don't expect anything. Medium term, which is 3 months to 6 months, start nibbling, start buying. The texture of the market is changing, and that is what you must recognize. And if you're looking at a strategy, I think it's too early to buy small and mid-cap stocks right now.
Okay. But yeah, the markers seem to be pointing up now, because the Reserve Bank of India has partially reversed the tight rules for small borrowers and non-banking lenders, reducing the risk weights for consumer microfinance loans. Now, this adjustment, remember, follows the deferral of new capital and liquidity proposals by the central bank, coinciding with that change in leadership as Sanjay Malhotra, of course, assumes the role of the governor. A lower risk weight means that lenders need to set aside lesser funds now as part of the safety net for consumer loans, implying an increase in their lending capacity. And, we all know as to how especially the MFIs have really been bogged down. So is this now a sign that a reversal could be coming in?
See, after, the policy is reversed already, let me put it this way. After almost 2 years, the Reserve Bank of India has decided to ease liquidity. In this case, I think it is very specific in terms of where the MFIs were. Now, is this a indication that the government feels that, okay, why was the MFI tightening done? The MFI tightening was done because the RBI felt that MFIs were recklessly lending, and they need to really follow a more stringent lending norm. The stringent lending norm meant less liquidity for them, and it also meant that they were lending less, and then provisionings kicked in. Now they are reversing, which is more money for MFIs would be available, and they would start lending more, and the assumption is that the strength in the MFI is not going to be there as the economy has started healing. Who would benefit? In this case, because what's come out on Tuesday, MFIs or banks which have exposure to MFI, they would gain. So for example, if I use Namra report for reference, the big beneficiary in this case would be RBL, IDFC Bank, IndusInd Bank, or for that matter, Bandhan Bank. However, banks or smaller banks are unlikely to see any kind of a change. So the first port of call really would be NBFCs, which have a large exposure to MFI, and banks which have a large exposure to MFI space. I think that's one pocket which could see some excitement today, but I don't think this quarter the numbers would be great, because the effect would start coming in 2 or 3 quarters. So let's see if markets actually what happens to these stocks after today's gap up start needs to be seen. But in terms of in communication, Reserve Bank of India is saying, guys, start lending. You know, we were telling you to run with one hand and one leg tied. Now it's time to cut that rope. Now it's time to run, jog, walk, whatever you want to do, because we want to genuinely increase the velocity of money in the economy. That's, I think, the message.
Because that was the pressured segment in the economy any which way, right? I mean, all this slowdown that we've talked about has sprung up from there.
Yeah, you know, see, I think Reserve Bank of India actually went into what could be called as an overprotective mode, which is that you wanted to protect, which was the right messaging and the right meaning there, but you just squeezed it so much that it started affecting the credit flow, and it started really backfiring. So I think that is the way it is.
Yeah.
If you like this video, then like, share and subscribe to ET Now.